we're with Rebecca. Good afternoon, Rebecca.
Hello, Tony.
From SMS Property Capital, and we're here to ask you some questions that I think investors would, or possible investors would want to know about the company and how it was set up.
Sure.
Because Rebecca's from a company called SMS Property Capital, and it's really to do with development investing. So first question I'd like to ask you is how SMS Property Capital come about, and predominantly it's a bit different how you invest through a development with your company. So explain a little bit about how it come about and the point of difference, I suppose.
Yeah, sure, no worries, Tony. Well, firstly, thanks very much for having me. So SMS Property Capital, the idea was formed from our owners after the GFC. Yep. They were kind of floating the idea around 2008, 2009, where after the GFC there was massive losses that developers especially incurred from banks, because banks would come in and write down valuations on different development sites and basically left their customers with no option to move forward. So it was a real destruction of what value was there in terms of property. And banks are very good at that. They just want to get their money back. They don't necessarily care about what the outcome is for the end stakeholders, which is fine. That's their rules, but we wanted to play the rules a little bit differently. So we've used this particular model, which is a managed investment scheme. It's a very common financial instrument, if you like, to facilitate the crowd that's available out there that has money that are looking to invest and may have heard about the good returns that property development gives as an asset class, but have not necessarily wanted to take the risk or have the huge amount of capital to put into it without using bank debt. So that's originally how the business came about. We've been going for just under 4 years now, you can look on our website, and Tony, I'm sure you'll let them know about our products. So
no, that's fantastic. Look, we're a great advocator of you guys of recent times because of the returns we've seen coming through. But what are the main advantages investing in SMS Property Capital over other traditional investments, and indeed leaving your money in the bank? Sure.
Well, banks, the cash rate's 1.75% at the moment. You said before you're not sure it's going north. It's either sitting on the horizon or going south. Possibly, we'll see what the RBA does. Cash is very low risk, but obviously low return. The main difference with us is that we're in an asset class that traditionally has had a lot of bank debt involved and a lot of leverage involved. So we've tried to take the risk as much as possible out of property development. So not having banks involved in this model is one of the huge ways that we do that. And we've tried to provide an investment to our customers in terms of making sure that they understand the process that the development's going through, because you've always got hurdles in property development. Absolutely. It's just what it is, but making sure our customers understand those hurdles, and that's done by monthly video updates and updates from the funds manager, as well as annual audited reports, of course. So making sure that our customers are there on the journey with us, and maybe learning something about property development themselves along the way as well.
Well, that's great. I mean, it greatly diminishes the risk to the investor, and not having to borrow the funds. I think it's a great plus for any investors looking at investing with you guys. But tell me, what are the likely returns that you're seeing on your projects, your developments currently, and you predict on the ones coming up?
Yeah, sure. So our development managers will always look for something that's around 15% per annum, because time's an important component of it as well. So we've got about 8 developments in the pipeline currently. We're just our first ones of those looking to come to fruition in the next couple of months. So at that point, that's when our funds manager, once it's finished and sold, that's when our funds manager will give those returns, whatever they may be. 15% a year is what we aim for, but for people investing in our equity product, it's important to consider that it's what you get at the end that matters. That's the development profit. So we've got some longer land subdivisions which are quite profitable, predicted to be quite profitable. Some shorter build projects, like just simply 3-lot subdivisions or 18 townhouses, things like that do require them to be sold before the profit comes back, but their profits vary as well. But we also have another product, the Development Income Fund, that has returned an average of 10.11% each month per annum over the last 9 months. So that's been good to get that income back to our customers that have invested in that. And then also, obviously, our equity investors in the development products will have to wait till they're finished to get that return as well.
That's great, Rebecca. So with the div fund that you mentioned just at the end there, that's the more secure option for those clients or future possible investors wanting to put their toe in the water, so to speak, that want to maybe see how it goes. Explain a little bit more about that.
Yeah, okay. Look, I wouldn't say it's the more secure. We can't really make those judgments. We've got to leave that to the individual customer and their financial advisor. But it does give an annual, like a monthly return, a development income fund, and it's all up to the management of our development managers and our funds manager working together to make sure the money that we raise for that fund is engaged inside our other equity products, 100% of the time, or as close to 100% as possible. So if we're not actively managing it, then it just earns the cash rate. So the average rate for this development income fund, the target rate is 7.5%. So the 10.11% on average over the last 9 months that has been returned has certainly helped our investors know that they want to keep investing because they are getting those returns. But that doesn't mean that the returns from the developments are not coming. It's just a lumpy kind of return at the end. So two totally different products. I'd say the development income fund is for income, but you don't get that big chunk of profit at the end.
Yeah, it depends on the investor.
Yeah,
I understand. That's great. So the process itself, if an investor wants to get involved and invest in your projects, your developments, how's that work? How do they get started?
Sure. Well, it's a very easy process. You read the PDS, part 1 and 2, and also all the financial information that's on our website. And then it's just simply an online application form, so it's fairly easy. Individuals, trusts, companies, self-managed super funds, we accept all different types of investors. For the development product, the minimum investment's $5,000, and for the development income fund, that income option, it's $20,000.
Fantastic. All right, well, look, it seems fairly simple to get involved, and how long would it take for an individual or an investor to go through the process to actually getting some sort of return?
Yeah, sure. Well, that depends.
On average,
Yeah, sure. Look, that depends on what fund they're invested in. It's totally different for each fund. So some of our funds are like the longer land subdivisions I was looking at before. There might be a partial distribution with those somewhere along the way. It just depends. But it's anywhere really from those 24 months to 36 months in the development product.
Sure.
And then it's the development income fund's a monthly return. So
monthly sort of dividend payment each.
Exactly, each month. So usually around the first week of the month.
Fantastic. So lastly, I suppose, have you got investors that are reinvesting? Right? Have you got a lot of people that are reinvesting in the developments as they move along? Because you said you had 8 now moving forward, or 8 either at the start or the finish.
That's right. So we look at those statistics all the time because it's a great measure of loyalty for us and making sure that we're on the right track as a business. So we have 60% of investors that have invested more than once in our developments. We don't have.
That's good.
Yeah, it is good. I mean, we'd love to have 80 or 100 because that makes our capital raising job much easier. But no, we think 60%'s pretty good, and we're constantly trying to improve that with the transparency of information that we provide. But yeah, that's what it is currently, and as soon as those initial developments start returning and closing out once all the sales are made, that's when we'll consider ourselves to have reinvestors if those investors decide to give us their capital back and invest again.
and you've got a couple of new ones just about to get started that investors that are looking to invest in one of your developments could get involved in.
Yes.
And when are they likely to get started and kick off or come out of the ground?
Sure. So look, we capital raise for them first. So it's all equity for this initial phase. So that is starting in the next couple of days. Actually, there's an apartment block that we're looking to do in Chermside in Brisbane. And then there's one after that. That's another townhouse development. We generally only release one at a time. We meet the maximum subscription, raise the development income fund money that we need as well for that, and then move on to the next one.
And you guys are really good with your feasibility studies and front end cost analysis. I've noticed over the last few years that I've been actually following this company. So can you give us a little bit of insight into the time you put into doing that cost analysis and feasibility study?
Yeah, sure.
It's just something I think they'd be really keen to hear from you on that.
Sure. Well, look, this new development that's being released in the next couple of days, we initially looked at that project in March of this year, and it's now July. So that might give you a little bit of an idea as to the time that it takes to go through our system, and the due diligence that's completed by the development managers and by the funds manager as well. And also, of course, by the builder, because they're contractually obligated to build this particular building for a particular price. There's a lot of hard work that goes in at the front end for us to make sure that this is a development that has a DA, already in place, that it is something that we can build and make sure there's not going to be any cost overruns over budget and things like that. So yeah.
You answered one of the really important questions just then. Most of your developments already have DA approval, so you don't have to wait a few years to push it through councils, which really slows up the return on investment.
Oh, for sure. Yeah, and it's a risk mitigating factor for us as well in terms of if we're looking for a particular development. One of our key criteria is that it's got to have a development approval already in place, because then that makes the process a lot quicker for us to then get on the ground. And there's no risk for investors, whereas they may get approval or they may not, once the site work.
Correct.
So.
Yeah, that's fantastic. Look, I think we've answered everything we need to answer today, and I really thank you for your time.
Yeah, no worries.
Appreciate the information. I'm sure
you very much.
The listeners do.
Good. I hope it was useful.
I'm sure it is. Thank you.
Thanks, Tony.